Hey everyone, welcome back to the channel. Today we're diving into the world of exchange-traded funds, or ETFs, and why they're such a game changer for investors like you. Picture this: you want to invest, but you don't have the time or expertise to pick individual stocks or manage a mutual fund. That's where ETFs come in. ETFs are like the Swiss Army knives of the investment world. They offer you exposure to a basket of assets. Think stocks, bonds, commodities, all bundled up into one neat package. And the best part? You can buy and sell them on the stock exchange, just like you would with individual stocks. Now, here's why ETFs are a game changer. They give you instant diversification and manage risk. For example, if you buy Apple stock and it goes down, you lose money. But if you buy Vanguard's ETF, any stock in it that goes down will average out, and you won't lose as much. Plus, they're super transparent. You can see exactly what you're investing in. And did I mention they're cost-effective? With lower expense ratios and transaction costs compared to mutual funds, ETFs can save you money in the long run. But wait, there's more. ETFs come in all shapes and sizes, covering everything from broad market indices to niche sectors and investment themes. Whether you're bullish on tech, banking on emerging markets, or betting on renewable energy, there's an ETF for you. Here's a quick rundown. ETFs are investment funds that hold a diversified portfolio of assets, such as stocks, bonds, commodities, or a combination thereof. They are structured as open-end investment companies or unit investment trusts, UITs, with shares typically representing proportional ownership of the underlying assets. Trading. ETF shares are traded on stock exchanges, just like individual stocks. This means investors can buy and sell ETF shares throughout the trading day at market prices, unlike mutual funds, which are bought and sold at the end of the trading day at their net asset value, NAV. ETFs can be bought through brokerage accounts, making them accessible to individual investors. Diversification. ETFs offer investors exposure to a diversified portfolio of assets, which helps spread risk across multiple securities. This diversification can reduce the impact of volatility in any single asset on the overall portfolio. There are ETFs available for a wide range of asset classes, sectors, industries, geographic regions, and investment strategies, allowing investors to tailor their portfolios to their specific investment objectives. Transparency. ETFs typically disclose their holdings on a daily basis, providing transparency to investors about the underlying assets they own. This transparency allows investors to assess the risk and performance of the ETF and make informed investment decisions. Cost efficiency. ETFs often have lower expense ratios compared to actively managed mutual funds, as they typically passively track an underlying index rather than being actively managed by portfolio managers. Additionally, ETFs may have lower transaction costs due to their structure, as they are bought and sold on stock exchanges like individual stocks. Liquidity. ETFs generally have high liquidity, meaning there is a high volume of trading activity and tight bid-ask spreads. This liquidity makes it easier for investors to buy and sell ETF shares without significantly impacting the market price. So, if you're ready to take your investment game to the next level, dive into the world of ETFs. Do your research, find funds that align with your goals and risk tolerance, and start building a diversified portfolio that works for you. Like and subscribe. Comment below what video I should do next.